Taiwan's stock market rebounded on Tuesday after taking one of its steepest drops in recent history. The benchmark index, the TAIEX, closed up 2.76%. That's after falling nearly 3.5% on Monday. Other Asian indexes also bounced back, with Korea's Kospi up about 8%. Most of the volatility has centered around AI and tech stocks, which took a big tumble in U.S. markets last Friday, especially in the tech-heavy Nasdaq, which saw its biggest single-day drop in history. This volatility in the markets has raised questions about how dependent they have become on a handful of big tech companies. To understand how the AI surge is reshaping stock indexes around the world, our reporter LaMattina spoke to Rolf Bulk from the Futurum Group.
Recent trading saw a severe tech-led sell-off. What triggered the pullback, and are we seeing signs of a sustained recovery?
What we saw in Monday in Asia was very much a follow-on of what we saw in the US on Friday. So there was a broad sell-off on Friday, but in particular in the memory sector, which is a more cyclical and volatile sector, and also in companies exposed to the AI build-out, such as in Asia, such as TSMC, for instance. So the sell-off was very much centered around the AI trade, and that triggered quite a material pullback of names exposed to that trade on Monday. Now, on Tuesday, we've seen a material recovery as the market realized that likely concerns were overblown and that spending is actually more sustainable than feared. And today we've seen a major recovery, in particular in memory names that have also seen the biggest decline in share price on Monday.
How is the AI boom reshaping not just tech stocks, but which countries and sectors lead global markets?
We've seen a few US companies, specifically NVIDIA, AMD, and Broadcom, very much lead in the design of the chips that are used in AI data centers. Right? So GPUs and ASICs, which are application-specific chips, or chips specifically developed for AI workloads. Now, those three companies have been the major beneficiaries of AI, but all of those chips are manufactured in Asia. So the logic components of the chips are primarily manufactured in Taiwan, whereas the memory components of those AI chips are primarily manufactured in Korea. So we have seen those two countries specifically benefit massively from the AI build-outs, and you can see that in the performance of the indexes of those respective countries.
When a handful of tech stocks are driving most gains, how stable is the broader market underneath?
There are a few linchpins, I would say, in the AI build-out. NVIDIA is one of them, Samsung, SK Hynix, TSMC. So these companies are essential, and if one of those companies fails in executing on their roadmap, so in NVIDIA, they are designing chips on an annual cadence. TSMC is bringing out new logic nodes every 2 to 3 years. And the same goes for memory nodes for the Korean manufacturers. If those companies mis-execute and do not deliver on that cadence, and the entire sector as a result will be impacted. So that does mean that there's a number of failure points here, but at the same time, these are very mature companies that have been on a cadence of designing new chips, bringing out new nodes for decades. And while risk continues to persist, I do think that there's no signs at the moment of any type of a concern around their ability to execute and continue to execute.
That was Rolf Bulk from the Futurum Group.